So the one thing that's cool about trading is, folks, I don't know how long if it depends on how long you've been trading the markets. I mean, some of you may already know this, but folks, this is a lifetime, multi-million-dollar skill. It does take a while to learn how to be a great trader. There's no doubt about it. I've been trading for over 12 years now, 10 full-time, but I can tell you that there are easier ways to trade the markets, and if you follow some great people out there, you can learn how to really do this. And I'm telling you, the financial gains on the back end, really, they're life-changing, but you've got to stick with it, okay? Everybody's got their own trading system and their own style. You've got to work on developing a system that's going to work best for you. But what I'm going to do today, mostly, folks, we're going to spend most of the time in live charts. We're going to talk about FX range trading for fun and profit. Basically, this is a powerful trading system that I've been using for many, many years, that somebody who was a pro bank trader showed me this little process on how they focus on simplifying their trading. At the time, I was using all kinds of indicators, and my charts were all over the place, and every 5 minutes when somebody came out with something new, I was jumping on board with that too, and I couldn't figure out how to be successful with trading. And I basically, my first several accounts, I blew through those accounts, and I finally got a clue that, wow, this is not quite as easy as I thought it was going to be, and so I had to learn something a little bit different. And so one of the ways I like trading the markets, I am a lazy trader. I am not the kind of guy who sits in front of charts all day long. I have 4 kids and I'm married. I have a lot of things going on in my life. I don't want to sit in front of charts. And I used to. At one point, I had a home office, and I had 9 computer monitors sitting in front, and I would literally sleep on the couch in my office, and I had alarms going off when a potential trade setup was set up. And I did that for about a year and a half, and I'm telling you, that takes a serious toll on every part of your life you could possibly imagine. So I decided to do something a little bit different and take a different approach to trading the markets, and I realized there had to be a simpler way. I wanted to basically be able to look at my charts once or twice a week, kind of look in advance, and find trade opportunities that I could set up and just let the trades hit and run. All right, now that doesn't, you can still be in the markets, trading the markets live and using price action, which I do sometimes too when I feel like I want to sit down and trade. I have price action strategies. I have software that I've developed that helps me to utilize those things. When I'm focused on long-term trading, because I have multiple accounts with multiple strategies, when I'm focusing on longer-term trading or multi-day trading, I'm looking for a process that is simple. So I'm going to actually show this to you guys today. And if everybody who's on this webinar, Reed's going to get me everybody's email address, and sometime probably on Monday-ish, we'll shoot you guys out a welcome email, say, hey, thanks for being on the Investor Inspiration webinar, and I'm going to give you guys a free, it's a PDF file where I go through a little bit more in depth on this range trading strategy. That is really cool. It's very easy to use. In fact, you can open up your charts as we're going along if you'd like, and you can see exactly what we're doing. So what we're going to do, again, we wanted to develop a system in trading the markets, and this isn't just Forex. I focus mainly on Forex, but you can use the same process in trading everything out there, because the markets work very similar, okay? So I'm particularly talking about Forex today, but it can work with anything. This is talking about trading market ranges. So here's what you need to get. The Forex market, or many markets in general, trade in a range, or what you call a channel, 80% of the time. So at some point, either on a monthly chart, weekly chart, daily charts, it could be all the way down to a 4-hour chart, that the market is going range bound at some point, okay, which means it's going on a settling. Now we're going to show you that there's different types of ranges. There's when a market's, it could be an uptrend when a market is ranging in an uptrend. It could be ranging in a downtrend, and it can be ranging sideways. Now, majority of traders out there say when the market goes sideways or goes flat, it's hard to make money. I'm going to show you that when a pair or any other financial instrument that you're trading goes sideways, where the market's just kind of bland for a while, those are awesome opportunities to use this strategy. In fact, I will show you here in one of the last charts I'm going to show you on New Zealand dollar, US dollar, a couple years back, where my ProSignals direct subscribers, we have a Forex trade signal service that we send out trades twice a day with exact setups, and we cleared 2,200 pips in 1 month and then like 1,700 pips the following month after that. All I'm going to show you on the New Zealand dollar USD, not all on New Zealand dollar US dollar, but more than 50% of the trades came off of those, but because the market went sideways. All right, and so we're going to show you how to do that. So we're going to show you how to find the ranges, where to take those entries, how to place your stops. And again, you can use the same strategy. You can scalp this strategy. I wouldn't highly suggest it, but it works best when you're thinking about trying to simplify, pull back, and trade longer term. Okay, so what we're going to do is jump into some charts, and we'll start walking you through all these. All right, here we go. All right, so here we're looking at the Euro US dollar daily chart. Now you can see here that when you're looking at this whole range bound system here, what you're seeing is that we are in an uptrend, right? How can you tell if you're in an uptrend? Well, you have a consistent series of lower lows and lower highs. You got a low and a high, then a low, then a higher, right? Then that low dipped down. We had a price breakout, then it came back in. But once it came back into the range again, this low was higher than this low, and then a higher high. So it's stair stepping. A 5-year-old can see that it's moving up, right? It looks like a stair step. The market never goes straight up, goes straight down, except for the last couple of days on the euro. But that, you get those market news announcements, and the market moves fast. It's things like this. The last couple of days when the market dropped like a rock, we'll show you that in a second. We had some serious droppage on euro-based pairs. So what we're looking for is consistent level of bottoms and tops. So you can see here as the market started moving up, I can consistently see that price continues to hit around here. And you can see, even if I took off the bottom of this trend, right, you could visually see, if you were sitting back here looking at that, you can see that price is beginning to work its way up. You can see when you were right here, the price was already here. So it was a great opportunity, potential saying, okay, this could be a potential bottom. And before that, we saw the price kept hitting right in this range here. So we drew out a trend line there. And now you just got to sit back and look for opportunities for that to trade itself out. So as the market continued going up, and then we had more confirmation where it popped back into the range, came here again. I had already had a sell position here, and I put a sell position back over in here again. I had to realize that once price broke down through here, it was a news-driven announcement. It shot right back up a few days later, about a week later. It really broke through without any hesitation, and then it continued in its range. So through that, you can literally set up, when the market is right here, like right in the middle, is what I call no man's land. Okay, this is where we stay away from trades unless you're trading on lower time frame charts and you see trade setups on that. But on this daily chart, there is no trade setup right there, not when you're trading on a range. And so when I was right in this range, I already had a buy position here and a sell position here at the same time as pending limit orders. All right, so we make sure we keep a nice stop. On a daily charts, I usually keep a 60 to 70 pip stop, sometimes 80 on the euro, on both ways, on the sell position and on the buy. Why such a big stop? Well, for one thing, when you're looking at trading in advance like that, market news announcements, other fluctuations can cause the market to break through. Even right here, the market pushed down through for a few days and it came back into the range. All right, so you've got to protect yourself to give the market some room to breathe. So you want to make sure you have a good stop. However, if you look at this, I'm actually looking at gaining, 300 to 400 pips on a lot of these runs. So here's what we do when this trade hit. Once that trade was up 70, 80 pips, equal to my stop, right? I closed 50% of my trade and moved my stop to break even. Why would I do that? Okay, one of the number one quotes that I use is Will Rogers, the famous actor, is the Lone Ranger back in the 50s, I think it was. But one of his quotes as an investor, okay, was, I am not as concerned as return on my investment as I am as return of my investment. So here's the key with that. Try not to lose. Okay? Losing trades is part of trading. But once you're up in a trade and the trade is in profit, there is zero reason to have any more risk on that trade. Does that make sense? So once that trade starts moving its way up and you've hit your trade and it moves up and starts working its way up into a level of profit, usually what I do is like equal to my stop. So I'm using the 70 pip stop. Once it's up 70 pips, I move my stop up to break even. What happens right there? instantly, if the trade reverses against me, I have cut my risk out of the trade. And second thing, well, usually first, I close 50% of the trade in profit. And what that does is allow me to take profits off the top, and then what I'll do is begin allowing that trade to move. And I may let that trade run for 3 or 4 days without even touching it. It depends on how far it moves. And as it continues moving its way up, I'm moving my stop. So once price hit here is kind of starting to move a little bit, I end up moving my stop below these levels here. And then we had a spike in the market, boom, I set my levels up below here, and you continue to ride that out. And as the market moved up here, I had moved my stop levels up here, and my take profit was at the top of this range, right in a little bit, usually about 15 pips in. And so I end up closing that trade out in a very nice profit. But the very day that that trade hit, I end up taking a sell position. So it chiseled away for about a week, and then the market dropped down. I followed the same process. At the same time, I already had another buy position set up. So you can see here that you can continue taking buys and sells, buys and sells. Now, when a market is trending up, I am more apt to take a buy position. All right, even though it is range bound, there's some great opportunities. It never did come back to the top of that range. The range started thinning out and it started moving away, which is a good indication that it's weakening down. And sure enough, the market broke back down through. What happens when here? You get stopped out. And you move on and you wait for another range. Did the market have? Well, there's always ranges. So let's dig back and see. It went trend bound, which is not you can trade in trading strategy very easy. As the market is moving down, you're moving your stop above the nearest swing, but it never really went range bound. Kind of did. There it goes a little bit. Recently, actually, it has been going range bound a little bit until the last couple of days, and it blew back through the bottom of the range. Now, watch the next couple of days. Depends on how much weight the ECB announcement that came out is going to continue to have. But my guesstimations about, since I've been doing this for 12 years, is that any news announcement that comes out gets stale very quick. We've got a couple of days of a rundown, a correction in the market, and what happens? At some point, this thing is going to begin weakening, and either it begins a new range, or a lot of times it will slide its way back into that old range again. Is that making sense? Very easy, and you're not going to have perfect tops and bottoms, except for a couple pairs. And I will show you here in a little while. We had some, but you can see here. Like, let's zoom in here a little bit. I'm going to show you what's going on recently on this euro. So right in here, what would have happened in here? Well, when the market went up, see, I would have put sell positions here. Market hit, came down. I already closed 50% of my trade. Moved to stop to break even, and then it shot back up. What happens? The second half of the trade, I closed 50% of the trade. We're in profit. We're locked in profit. I moved my stop to break even. No risk on the trade. First step is to remove the risk from the trade. Okay, we're trying to gain a monthly pips in the account, gain a percentage of growth, right? Long-term growth. And when what happens is the first trade closed out. A second trade hit for a sell. Hit. Came back down, I closed out 50% of the trade, moved the stop breaking even, set up another trade. It shot back up the next day, we did it again, and so for literally every day, the market kept going up, and I was wondering, okay, is this thing ever going to work its way back down? Eventually it did. We ended up taking several great trades out of that, and eventually the market works its way back down, and it came back into the bottom of the range, until it blew through. And we'll watch the next couple of days. What happens is the market's going to keep pushing down if the ECB weight is going to continue, or if you're going to start seeing these candles slow down and it pops back into the range. So let's go look at one of my favorite pairs here. This is the euro pound, and I'm going to show you most recently. If I would dig back in the charts, I can find tons of range bound activity, but the euro pound is a very range bound. In fact, it used to be better. It's still really range bound, but back in the day when the euro and the pound were a lot tighter in correlation with each other, this thing was a massively range bound pair. But now sometimes it goes off a little bit, like when it starts moving. The euro and the pound have gotten to the point to where they will be in sync for a little while, and then they split off and separate a little bit. And so you start seeing movements like that, but then what happens is the market goes range bound again. So, and they're not perfect tops and bottoms, folks. That's why you've got to give the market some room to breathe, but you've got to find opportunities, okay? So we have the market came down here, went up here, came back, hit here again, right? So when it hit there again, I saw, okay, we had a potential double top right there. This might be a good opportunity to sell in the future. And I would see if this bottom becomes something or not. Price came up. I ended up taking a trade, and it got stopped out. No big deal. As the market reversed very quickly the next day. I actually took a market order and allowed the market to continue taking it down. So I did take the trade and closed up enough profit to more than cover the second trade. But now we got a second bottom here. Okay, and it's hitting right in the same level here. Like, see again, you see the tweezer bottoms right here? That's basically what the market blew through. It rejected quickly. So I'm really looking here when it comes to this pair right here. I'm looking at the bottom of the actual candle itself and not the wick as much. Came down same level. So at this point, I'm thinking, okay, in the future, this could be some great trading opportunities. Let's kind of just watch it out and kind of see how it does. When the market's really bouncy like it has been over the last 4 or 5 months, sometimes it depends on the pair. I'm taking limit opportunities, but a lot of times I'm waiting for confirmation for the market to give me the trade. So I had already set a sell trade up in here. Market came up, took us up, closed 50%, moved to stop break even, shot up, second half closed out, took another trade, and we worked that thing all the way down and took a good trade, right? So is this making sense, folks? It's not perfect. It's not rocket science. Let's zoom in here a little bit more. I'll show you one more. Right here, you can see a great little range. This happened over, what, a 3-week period? Look at that. That is not perfect, all right? But you can see that there are a lot of simple support and resistance levels, right, that continue to get hit at the tops and bottoms. You can narrow it down even deeper. If you really want to see a lot of trades, right, you can see it even more. You probably would have been stopped out a couple times, but you would have taken a lot of great trades, okay? So on those, now that you're getting tighter here, you probably would have used a smaller stop, so you would have taken a lot more trades, smaller pips per trade, but obviously when you trade less lots, you're increasing, when you're trading the smaller stop loss, you're increasing your lots, right? So you want to make sure you always have that risk management in place. If you're risking 1% of your account balance or 2% of your account balance, whether you trade with a 20 pip stop or 200 pip stop won't make a difference on your risk, because all you're doing is changing the amount of lots that you calculate. In fact, when I send you an email on Monday, I will actually send you guys out a link on our blog that we've got a video that shows how to do that, and like 3 worksheets that shows you how to calculate your pips. So when I'm trading, I have a worksheet in front of me. It's anywhere from 20 pips to 150 pips stop losses printed out in front of my face. If I see a trade, I know right when I put my stop, I can say, okay, that's a pip stop. I know exactly how many lots I'm trading in advance. I have a worksheet I can send you guys. Okay, so let's go to the next pair. Okay, let's go look at the Euro New Zealand dollar. Euro New Zealand dollar is a great pair to trade. It can be very aggressive, very, very aggressive. In fact, this pair dropped down. Oh my gosh, I'd had to guesstimate how many pips exactly, but just by quick glance, 800 pips in the last couple of days. Now, here's what we're seeing in the market on that right now. Oops, where'd it go? All right. Sorry, I got a lot of lines in here. I got to zoom in a little bit so we can kind of spread these out. But you can see, okay, where's it at? That we're already, when the market closed on Friday, we already closed out with a rejection. So now is where we stop and wait and see what continues. If this rejection continues and it starts to settle back in, it's not that these sellers came in aggressive and pushed the market down and then the buyers came in and pushed the market back up, right? It's people dumping off their trades and lack of buyers in the market that causes the market to drop. And so when the market starts when the sellers stop pushing so hard and then the buyers' natural trading activity takes over, then what happens? You get the rubber band effect. The market pushes down, rolls back up. So this is just an extra tip. It's kind of off on a tangent. Sorry about that. But Euro New Zealand dollar, I am watching here at the 16300 level. 16400 is a big key level for that I've traded over the years for a long time. And so once if price continues rejecting when the market opens Sunday evening, or which is Monday Asia time, I'm looking for potential entry opportunities because of the rubber band effect. Okay, so let's go back to the range trading part. Okay, so zoom back out. Euro New Zealand dollar. Same thing here. I'm going to scroll into a couple little zones here, and we're going to show you what I'm talking about, of how you can find these little range-bound movements. Look in this area here. Now, you're not going to hit every single day. You're in no man's land most of the time, but once you start seeing a consistent top and bottom potentials, there was a lot of opportunities. What happens? The market broke down through, and it started a new range. See how that works? So what your goal is to try to find these ranges. Sometimes they're really small ranges, really tight ranges. You can actually move these support and resistance levels up a little bit, up into here, and you can find that you could have actually almost taken daily trades at some level off of this pair. A whole bunch of trade opportunity in here. Not every day, but once it hit a top and a bottom and it pushed a little bit more aggressive, you had some great entries. Some days you took a buy and a sell in the same day. Okay, all right. Let's zoom back out there. I knew I had another one in here too. I was looking at on the Euro New Zealand. Let's talk about how it can do it in a. Oh, yep, that's what I was want to look at. Right here. You see how that looks? That is an upward moving range, right? So it's trending up, but it's pulling back really, really strong. It's not flat, but it's kind of flat-ish. Okay, so we've got a top and a bottom. I'll zoom in here a little bit so we can kind of. I didn't turn that off. All right, so I'm going to pull that in here a little bit. Kind of flat-ish. Zoom it back out just a tad. But you can see here that there is a top of this trend. If I can get it to draw. This thing's tricky when you're zoomed in at that level, right? The bottom does the same thing. And there was a lot of opportunities. If the market went real slow there for a little while, okay, it wasn't really being extremely aggressive, so it was really solid. There's a lot of sell opportunities, even though it's counter trend. Okay, same thing with the buy opportunities. Obviously, that would be with the trend. But if I were to draw a trend line in right there, you could see that there's a lot of bobs. So I'm taking sells at the bottom, buys at the bottom, sells at the tops, and sometimes every other day the market keeps bouncing between those little ranges. Okay, so let me scroll down to another pair here. Dollar Canadian. All right, dollar Canadian. Great pair that I haven't been trading as much lately, but at some points, I don't want to scroll back into my charts because I think we've got 15 minutes, but there was a time when this pair went sideways for so long. Oh my gosh, I was just cleaning house. Every other day, it was re-hitting the entry level. I would close off some pips just to see how far it would run and move my stop and set up another trade. Come back down, close out the drop, and this tool eventually exploded back up. But if you look in this area here, let's zoom this in. Oops. I got to remember to turn that little thing off and do that. All right, so let's look in this little range right here. You can see here the market went sideways. What happened? The market was going up for a little bit, and the buyers basically were losing strength. Okay, and the market kind of went, bleh. And as the market went through a little bit of a cycle, not as much on the high level, on the resistance level, but on the support level, you saw a consistent level that price kept hitting around the 12400 mark. Now, what I mean 12400 mark, think of it as this way. I call it 12400-ish because, again, you got to give the market the room to breathe. It's never going to hit. A lot of days it did hit pretty right on. If you look at this, boom, it came down to 123, a little bit below 123.50, rejected quickly. In profit, shot back down. Next day, we would take another trade, came down, take another trade, and we would have written out up for a little bit. Another trade, another trade, another trade, another trade, another trade. Again, when it finally hit the top here, now we have a top potential. Kept hitting this top, rejecting, hitting this top, rejecting. Now at this point, after it hit top, rejected several times, I would have taken a sell. And guess what? The market dropped. We took a sell. By the time the sell was here, I already had another buy position here. Usually 5 pips, 5, 6 pips within the range and never got taken in. And I already have another sell position set, okay? So I might have the sell position set at 127.80. But I have my take profit level on this, on the first sell that I was already in. My stop loss would have been below my entry. So even if I would have got stopped out, it would have stopped out one trade, shot up 50 more pips, 15 that is, and then hit and took another trade. So again, I'm probably oversimplifying this, guys, because 45 minutes is not a real lot of time to teach a strategy, which is why I'll email you guys out, and then I've got some the little worksheet I've got for you. Will greatly help. Another pair that is really good is the Aussie New Zealand. Love this. Now look at this, the Aussie New Zealand weekly chart. If you look at that, now obviously the market's broken through severely, and when you're using weekly charts, you've got to scale up your stop losses when you use this strategy, because you might be setting a trade in advance. It might break through 120, 130 pips. When you're talking about looking at weeks at a time, you've got to give the market some room to breathe. But look, again, this is very simple. It's just bouncing between a support and resistance level on an uptrend and working its way up. Not perfect. Sometimes it broke through. What happened right here? It broke itself down into another range. If you see this right here, see? Boom, boom, and now you got another mini range. Broke back up, came and started working its way back into the range. Now I'm going to look at to show you one last pair. Where's my New Zealand dollar? Aha. All right, I want to take you through. Now this happened, this particular trade that I end up showing, set of trades, was all the way back in 2012. It would have been spring of 2012, February through very beginning of March. So basically February through April. Okay. So for a couple months, we were literally hitting 2,000 plus pips a month. One of the months we ended up hitting 1,700 pips, and that is trade signals that we send out to our clients and say, here, look, here's some trade setups, and here's the stop, here's the take profit level, and then once a trade is up in profit or whatever we do, we say move your stop. Okay, we're up 70 pips. Close your 50% of your trade now. Move your stop to X, break even, or a few pips in. And so what we did, the market had been rallying up here for about 6 weeks, and then what ended up happening, actually, yeah, a little bit more than that, but then what ended up happening is right around the beginning of February, the market really went stale. Okay, so I'm going to zoom this in a little bit so you guys can see this. I'm going to stop right there because I want to show how it broke back out. It went stale for a little while. So here's what I was looking at. Okay, we're going sideways. So I need to find out if this is this just going to last for a couple of weeks, or if this is something we're going to be able to pull off some trading opportunities, and this is going to go range bound for a little while. So once the market had hit around, kept bouncing around this range, I started seeing that there were some key levels up in this range. We took one sell opportunity here, got some pips, took another one here, we got some pips off that, almost got stopped out, ended up having like an 80-something pip stop on that, almost got stopped out. And then I had a buy position set up here because this bottom continued to get hit over and over again, it kept rejecting. So I thought we had a nice strong support level, price hit and blew through. Well, guess what? It happens. So what I did is stopped and waited a little bit. So here's one thing you need to, and I talk about this in a lot of my trainings, is once a key level of resistance or support gets broken, it's kind of like floors and ceilings. You can kind of see this. Imagine this is the second floor, this is the first floor. Once price broke through that level, it's either going to do one or two things. One, it's going to continue somewhere else, or two, it's going to slide back into the range. Okay, a lot of times the news announcement will push it down, but in this case, it set up a new range. So once that broke down, that old support level became, boom, the new resistance. Once I saw that the resistance was going to hold, and we second level that we came down here, we hit another support level, I started setting up sell and buy opportunities. So as soon as price got up, I took a sell. I set a sell order in advance, or sell order in advance. Price hit. We worked that trade down. They closed in profit completely there. Of course, we scaled it in, just like I showed you before. We closed 50% of our trade, do all that. And we took another buy, almost got stopped out. Ooh, the market pushed down, rejected, but came back up. And we had closed out our profit here. Had another sell, but never got taken in. Had another buy, didn't quite get taken in. It went sideways for a couple weeks. And then we took another sell, buy. At this point, we're closing out 40, 50 pips a pop. All right, until the market broke back down. But folks, that's really how simple that can be. I'll show you. I'll send you the PDF. So just look for the email. It should be Monday-ish, and we'll get you that info, and you can take it through and show you what I can show you more with it, how that works. And the course, actually, the little PDF file takes it a little bit more in depth. So it's pretty cool, and I think it's got some links in there to some videos where I walk you through it some more. So just want to give you the basic information. Let's jump in here. I want to show you guys a couple of offers. Number one, I got two great offers for you today. I have a complete range trading course. Now this is a course that we normally charge $297, and we're going to show you a lot of videos. It's a lot more in depth that takes you through some really slow walk. Not slow as in boring, but I walk you through slow enough not like I'm doing now. Okay, where I'm actually showing you how to trade ranges, and this can work with Forex. It can work with stocks. It can work in any if you're an oil trader, it works the same type of way. Is finding a range. Now, when a market's not going range bound, you're using a different strategy. But the market is going range bound. If you can stop and learn to identify those ranges, it's going range bound 80% of the time. So your goal is to learn how to master finding those ranges, and the course will help you do that. It's a $7 course. It's normally $297, but we're offering it to investor inspiration people for $7. Why would we want to do that? We want to introduce you to all the cool things we got going on, and hopefully you'll do some more business with this in the future. It's that simple. So if I can give you a great deal today on something that's going to be very impactful for your trading, then we started off to a great relationship. Okay, that's what business is all about. We know we do have a relationship together. So second great offer is what we call our Pro Signals Direct Service. Now this signal service has been around since 2011, almost 6 years at this point. So we're in fact in January it'll be 5 years. So 5 years. In January it'll be 5 years. And what we do is every single day, starting Sunday evening, over the weekend we do an analysis of what happened over the week, and we look for trade setups. Now there's sometimes on Sunday evenings that we might send you 2 or 3 trade setups for the week. Now, we already have probably 8 to 10 pending setups already sitting there that I've already sent you previously. But sometimes on Sunday, the market really moved a lot, okay? And so we'll sit down, and there might be 13, 14, there's at sometimes 20 trade setups over 26 pairs that we send to you and show you, we give you the exact buy entry or sell. Okay, here's an example. It'll literally say buy US dollar at 1.1000, stop loss is 1.0980, your take profit level is 1.1500. Okay, we literally give you the buy or sell entry, the stop loss, and our take profit level. And of course, as the trade gets moving, it hits and it's in profit. We show you how to start scaling out of that trade. You know, it might say the trade is up 70, 80 pips, 100 pips, close 50% of the trade now, and move your stop to this level here. And so we're going to work, we'll basically follow. It's a full follow me service. These are my trades as I'm trading the markets, and I'm just sending them out so you guys can have them in your hands and you can follow along. So what we're going to offer you today is you actually can buy that, the full course for $7, and we're going to give you my Pro Signals Direct, which is $97 a month. We're going to give you that for free for 15 days. So once you buy that range trading course for $7, it'll automatically give you access to the trade signals. When we send the trades out twice a day, so we're sending usually about 10 signals 10 trade alerts per week. Starting Sunday, we send 1. Monday through Thursday, we send 2 per day, and then Friday, we usually close out and send 1. It depends on where the market's at. If the market explodes on Friday, which it rarely does, but sometimes it does, we may send out another update. Hey, man, the market's really moving. Let's close these out, or let's close out a couple trades. So you can follow along, and then you get the range trading course. You can learn how to really start trading these market ranges, and we're going to give you for 15 days the Pro Signals Direct Service. I'll show you what the link is. In fact, I'll put the link right up in here into the box. Alrighty, and where do I put this in here? I put it in, no, I don't put it in attendees. Where do I put this in the chat box? All right, so here it is, guys. I'll put that in the chat box, make sure we can see it. And you guys should have that right in there. Okay, and we'll take you through a walkthrough, show you what this looks like. It's going to take you to this page right here. If you want to watch the video, it shows a little bit more about the range trading course, but you can click on it right here and get a course for $7. We also offer a 30-day no questions asked money back guarantee. If you're not happy and you think it sucks, just email my support team. All the emails you're going to be getting from us are support@tradeadvisorpro.com or support@tradesignals.com. If you just push reply, say, hey, my name is so-and-so, here's my email address, I want to cancel that service. My customer support team will help you. If you have any questions, I don't care what the questions are, trading related, of course, send my support team an email. They are here to help. I got a really awesome support team that I've been working with for years. My support manager has been with me for a very, very long time. She knows her stuff. And if you have questions like you want to learn how to trade more, how to improve your skills as a trader, we have almost 100 videos on YouTube. You just ask her what specific questions you've got, and she'll send you some links to some articles. We have worksheets you can use to help grow your trading, all kinds of stuff. So anyway, $7 today for the FX range trading course. It can be used for any type of trading. And then you get our Pro Signals Direct. You get the full version of our trade signals just for a 15-day trial. And then if you decide to keep it, it's going to continue charging you $97 a month. Now, if you decide to buy the course and you don't like the signals, just send us an email. Say, hey, love the course, but don't really need the signals. I doubt you're going to do that because the signals are great. And they'll cancel you at any time. Again, full money-back guarantee. So that's all I've got, folks. If you've got any questions, you can pop them in the box, but I doubt there'll be a lot because it's pretty self-explanatory. So let's see, go to questions here. Let's see what I got. Okay, I never figured out how to open this. Does it apply to equities? I don't know a lot about trading the equities markets, but yeah, when it applies to any type of chart, just like Fibonacci. Just think about Fibonacci for a minute. Fibonacci works in all styles of trading. As long as there's charts involved in some levels of trading, it comes down to simple support and resistance that once the market has gone through a push, either up or down, it tends to in what you call a staleness. It continue going up, continue going down, or going sideways. Regardless, it's because the market is unsure, and so it's starting to go. The market has settled down a little bit, and once that goes settled down, it tends to go range bound. So yeah, it'll work in equities as well. So the key is you can. What brokerage is good? That I don't give referrals on because. Oh, cool. Thanks. Hey, great. Thinkorswim, yeah, it works. I actually trade options off Thinkorswim as well, and it works the same type of thing, man. The charts are right there. You can find those ranges. So the key is if you can learn how if you can learn how to recognize those ranges. This is just one strategy you can add to your arsenal, folks. I think it's like when you go to war, you don't just go out there with one gun or a knife and think that's going to do it. You ever watch any TV shows, movies where action movies, man? They got grenades all around them. They got knives and handguns, and the key is you want to have a different tool for different markets, right? This is just one tool. So if you learn how to play with this a little bit and learn how to find those ranges, then you can easily use this and add this. You'll get a lot of trade opportunities just on your own charts. Somebody's asking, is it strictly Forex? The trade signals, yes. The trade signals that we do are strictly Forex. We don't have anything in the options. I'm working on that with one of my buddies who's actually an amazing options trader. We're working on adding some new services in for that. But right now, it's only options. Let's see. Somebody got the course. Awesome. Who is that? Is it Jonathan? Can't really see all this thing. I got to figure out how to open this thing up. Let's see here. Brokerage is good. Does it apply to equity? Are you happy trading on Win 10? Roger, I'm not sure what Win 10 is. Oh, I think those were, okay, I think it's from the last webinar. So that's it, folks. If you guys have any questions, again, I'll pop it back into the chat box. Well, it's already there. You can see it right there. If you guys have any more questions, if you contact my team, let's see if I put this slide up here. I thought I did. I did. support@tradeadvisorpro.com. We can answer any questions you've got. If you have any questions before you buy anything we've got going on, just send us an email, and my team will get on it pretty quickly, and we're here to answer any questions.